So making tax painful, or as HMRC reference it as making tax digital, MTD. But I rather suspect that you, like me, will think it's more painful than digital. So where is the pain coming from? Well, you may be submitting one self-assessment tax return as a landlord, property investor, or indeed self-employed person. But going forwards, did you know that you may be required to submit up to 11 tax returns? That's 11. So why is making tax painful really important for you to understand? Landlords could face penalties if you miss your quarterly reporting requirements, especially for the year end. And it starts from the 6th of April 2026, but not everyone needs to be registered for MTD just yet. The idea behind this video is to help you understand more about MTD, the things that you need to think about, and safeguard yourself for the future. My name is Simon Misiewicz from Optimised Accountants, and here's our website, so feel free to look at that. There are lots of good stuff that you can download for free using those QR codes. There's the property tax ebook and access our online property tax course as well for absolutely free. Zero, nada, nothing. The links will also be in the description box below. There is also a map, an interactive map that you can use right away, and it will help you to identify people that are property sources, conveyancing solicitors, property accountants, and numerous other types of organizations that are looking to help you today to make more of your property tomorrow. So have a look at that map. If you want to be added to that map, feel free to send a message in the description box below and tell me about your service, and we can have a chat to see if we want to add you in and if it's right for you. Okay, so let's have a look at some of the issues. So MTD, 6th of April 2026. That's really the kickoff date, but not everyone is going to be required. If you are required to register for MTD and you don't, then there's going to be penalties, fines, some things that you need to be wary of. So some of the issues that you might face as a landlord, property investor, or self-employed is the amount of work that's going to be required for quarterly filing. Because a lot of you watching this video, which one is it? Because there's 85% of you apparently do it on a 30th of January or on the 31st of January. So there's a lot of you out there watching this video thinking, oh what, I have to do this now quarterly? Well, not just quarterly, but that's the deadline. So you pretty much will have to keep on top of your finances on a monthly basis. But here's the kicker. I've been saying for years that property investors aren't great at business. And why do I say that? Because business people who are millionaires, and I, by the way, I check my finances on a weekly, monthly basis. But I know full well there's people that aren't as successful as someone else who is doing this work because they're not looking at the income, they're not looking at the costs, they're not controlling those costs, and therefore they're not careful with their finances. So this may be a good push to make landlords who aren't really looking after their investments to focus more as a business owner, because that's what you are. You are a business owner with these investments. So take time to look after these investments. Equally, the excitement of buying a new property and putting it on social media. Hey, I've got the new keys. When your other properties are suffering and making losses, they need addressing. And that's the thing that this hopefully will bring about, is like you pay more attention to your numbers, you will make more money. That is categorical true, right? So hopefully this will bring that about. Annual amendments. So once you do your monthly, quarterly reporting, so bear in mind, it's quarterly reporting for self-employed people for a year, obviously 4 quarters. If you're a landlord, 4. You have to do 2 separate ones. So if you've got software, you can't use one software for both self-employment and for rental income. You have to have 2 pieces of software, which means there's 8 tax returns to be done for someone who is self-employed and a landlord. That's painful. Then annual returns, well, there may be 1 each, so that's 10, and then you have to do a final submission as well. Costs. There's going to be accountancy costs somewhere. Now, you may want to use an accountant just to set you up, and then you maintain it going forwards. That's totally fine. You may completely be IT savvy and can do everything yourself. Equally good. But for many of you who will fear about the HMRC brown letter coming in after the event of submission saying you got it wrong and here's a bunch of penalties, may be a little bit too much. So working with accountants would be a good idea. Working with software, a better idea. Okay? What I mean by working with software is better than accountants is you are taking ownership of the data. You're looking at it and you're being careful about it. An accountant will only know so much, but you will always know more than them. So if there's missing costs, you'll know that there's missing costs in your system. So be more financially acute and trained, and then that will help you build your wealth better. Spouses separate systems in some cases. Now, if you've got a system, you need to be careful which system you use. So there's lots of MTD that's out there, but do they allow you to split property in the right allocation? What I mean by that, you could be a husband, wife, civil partner, and you might want to split that property income between the two of you. You may actually have a joint venture partner. So you could be in a situation whereby you and your spouse have got 25% each, but the remaining 50% belongs to a joint venture partner. So you need to think about that with whatever system that you use. And late filings. If you don't do your quarterly reporting consistently, then HMRC will fine you. And it's a point-based system as well, which I find really strange. But they'll have a point-based system, and then at the end of the year, they'll look at it and then fine you for all the missed reporting that you've done throughout the year. In addition to that, they may then have a penalty for the final submission as well, if that's late, and interest if you have not paid your tax on time. So there's a lot to think about whenever you're doing MTD. Further, some ideas that you can take away is open up a metal bank account, which is free banking. Open up a free agent bookkeeping system, which if you combine the two, use metal bank and link it into your free agent bookkeeping system, both of those will be free. Free bookkeeping, free banking. Can't be bad. Now, we can help you set that up. So if you get stuck, don't worry. Put a comment in and we'll show you how to do that. Some other things you could do is work with an accountant. Yes, I would say that, wouldn't I? But I think the one thing I would say is how much stress do you want in your life? Are you really good at what you do? And having this MTD, would it cause distraction and then affect your business, affect your rental income? If it would, then maybe hiring an accountant would be the right thing for you to do. Get trained and be prepared now. So look at the systems you want to use in the future. You may not need to be required to meet the MTD eligibility and go through MTD right now. But isn't it better to have a look at these systems and train yourself up for the time that you will be? And finally, use property reporting. Please use the systems to help you to identify problems with your property portfolio and stars in your property portfolio so you can buy more of those in the future. Hopefully that's been useful. My name is Simon Misiewicz from Optimised Accountants. Why not book a 10-minute discovery call with me using that QR code? Plus the link will be in the description box as well.